India's only pure play AI listed company that you're looking at, Jasmeet, in fact, caught up with Srikanth Velamakanni as well of Fractal Analytics and Ashwath Bhat, the CFO of the company, who talk about their quarter gone by, but also the margin outlook and what they're expecting when it comes to growth as well.
Before we start, I would like to throw some light on the margin end. We did see that the margins have been a bit fluctuating in the past times. I would like to understand what's a sizable range of margin you'll expect going ahead.
So the first thing we look at when we look at our margins is our gross margins, which is really like a unit economics figure. Our gross margins have traditionally been very good in the 45-46% range. We expect those numbers to remain there or go up. Next is our adjusted EBITDA margin, which is at around 20% till last quarter. So we are expecting that adjusted EBITDA number to stay there or only increase. Then comes the reported EBITDA number, where our margins have been affected by ESOP costs. Now the ESOP as a fraction of our revenue is actually decreasing. So margins will improve there and also in our net income side. Overall, our margins only will go up from here.
But how do you all see the ESOPs reducing at the end of the day? Because ESOPs has been at high over last few years. So what are you all doing to reduce the ESOPs going ahead?
So ESOP issuances have happened. We wanted to make sure that every Fractalite has stock in Fractal before we file for the DRHP. So we did a massive round of ESOP issuances. Now we don't have to do that in the future. So whatever those are, those will play out over in the P&L over the next 3 to 4 years. But after that, they'll go away. And even that as a fraction of revenue will significantly be lower than our historical numbers. So Fractal is an inherently very profitable business, high gross margin, high reported adjusted EBITDA margins, except that ESOP charges, which are going to go down, and therefore overall profitability will go up.
Got that view. Let me talk to Mr. Ashwath as well on the overall Fractal Alpha bit of it. Yeah. Right now, we see the top line growing at a tremendous way. How do you all see the overall bottom line spanning up, and what's the size of the revenue you'll expect from Fractal Alpha going ahead?
Yeah, Fractal Alpha, two things that you will notice. One, the growth has been pretty good. Like it's almost been around 70 to 80% kind of growth. And gross margins are also close to 70%. So two things that we focus there is, one is what's the growth and what's the gross margin. Both have been very good. And the other thing is also improving rapidly is the amount of losses that we have in Fractal Alpha business. So losses have also come down rapidly over a period of time. So as long as the growth and gross margin, obviously the unit economics works in such a way that your profitability will only keep improving as we move forward. So we are not worried about, it's called Fractal Alpha because our idea is to generate alpha in that business, and we're doing very, very well, and we're very happy with Fractal Alpha. In fact, in one of the Fractal Alpha companies, we increased our stake to 100% just very recently. So it shows the confidence that we have in Alpha and confidence that we have in the future of Alpha.
Well, got that. Talking about the overall R&D spends, given it's an AI-based business, your technology gets obsolete at a very high space, right? So what's the R&D space in your mind, and how much you all have been spending, and what's a targeted forecasted range of how much will you all be spending on overall R&D of your company?
So we spent 6.1% of revenue on R&D for the first half of this year. We expect that number to only go up, both because our revenues are going up and 6.1% of a higher number will be higher, but also because we are going to increase the percentage of revenue that we spend on AI R&D. We think it's important for the Fractal future, and we will do this in such a way that it comes with the expanded gross margins are used to spend on this. So as Fractal's gross margins expand, we'll use some of the gross margins in expanding our R&D investments. That's the way we will make sure that our adjusted EBITDA margins as well as reported EBITDA margins are going up steadily.
Oh, got that view. Talking about the overall competition span of y'all, we see Anthropic AI releasing 10 to 11 odd plugins. So do you all see that as a competition to your business, and how do you see that being managed going ahead?
See, Anthropic, OpenAI, Google Gemini, Grok, there are several amazing foundation model companies. These foundation model companies are extremely capable, and they're producing phenomenal models that are matching and exceeding human capability across a broad range of cognitive tasks. Now we take that as a starting point, and we use to build agentic models that transform enterprise decision-making, enterprise AI. So if underlying models become much better, it actually improves the results that we can accomplish with our clients. So this should be a tailwind for us, that it will help us in expanding the TAM, the total addressable market that AI has inside companies, as well as get much better results, much more magical results that help us expand our pie and expand the results and the performance of the companies that we serve.